What's going on, guys? What's going on, guys? Tower James, hello, hello. Happy Sunday, everybody. Just getting sorted here. Just give everyone a couple minutes, guys, to log in. You guys know the drill by now, probably. Rusty, what's going on? How are you? Thanks for joining. Just make a quick post here. Okay. Live now. Okay, Raphael, how are you? Rusty, what's going on? Carmine, hello. Happy Sunday, guys. Happy Sunday. Hopefully everyone could hear me okay. Mic should be working this time. I know we had some audio issues last time when we first started off. Internet Explorer, how are you? Pretty excited for this session. A little different than the usual one. We'll start off the same as always, just covering technicals, where we are and everything, and some events coming up for the following week, and how to prepare and study and stuff like that. But I have a different type of session set up for the back half. So pretty excited to kind of walk through some of that stuff. Tarson, what's going on? Awesome. Got about 30 viewers jumped on quickly here, so just give everyone a minute or two. I think people got to join the link and stuff. JC, how are you? Good afternoon. Rusty, yes. Yeah, we have a great set of moderators and crew within the Discord. Pretty awesome people, and everyone's always pretty accessible with knowledge and answering questions, and it's an awesome community. Glad you're enjoying it. Awesome. I'll probably get started, guys, in about 30 seconds here. Just want to make sure folks can come on. I didn't really go public with this one. Wanted to keep this sort of a tight-knit, sort of just for all the subscribers and everyone who's obviously been loyal over the years. We're just going to kind of keep this one sort of small. So that was the hope. So we'll get started in about 30 seconds here when all the Spud Zone folks jump on in, and we'll get started. Erico, Leslie, Mark, what's going on? What's going on? Thanks for joining. Cool. Awesome. So I'll get started here. Basically, run through, I guess, quick disclaimer. I'm Spud from Spud Zone. You could follow some of the picks and trade ideas with educational learnings. You could follow them within the Discord itself. I do have some social media channels within Webull and StockTwits. You can follow some of the ideas there. I'm purely a technical momentum trader. Everything I'm trading is with typically my own money. I do not trade for anyone else or have any other types of accounts. So obviously do your due diligence and trade at your own risk. Second is pretty excited for today's lesson, guys. It's Sunday. We have a pretty big week coming up. Fed Chair Powell will be speaking, I believe, on Tuesday and Wednesday. So we have that coming up. We have some jolt reports. We have job reports for February. So it's pretty action-packed week, to be honest, in terms of some data, Fed speakers. We had some Fed speakers last week. Actually, Fed speaker Bostic, I believe, had really sort of turned the market into a whole nother gear, caught a lot of people off guard, and that was probably half the reason we rallied up the last couple of days. Obviously, we can give those gains back very quickly, as fast as we just saw them all on Friday and Thursday afternoon. So, it's always be prepared, be nimble, always be managing risk, never be greedy, trying to always lock profits at your levels. And we're going to talk through a lot of levels today. And today's lesson, I want to focus on, there's a lot of people who love to swing long term, right? Or potentially, I guess, make an investment into a trade that they think could work out in months or years or decades to come. So going to talk through the larger sort of dated time frames and how you can maybe analyze whether something could be a good trade or a good buy or a good sell, right? Going short, going long, do I want to lock profits? So going to talk through some charts because for me, it's all technicals. What does the tape say? You guys always see me say, like, what's the tape saying? Is the tape selling? Is there an algo just selling and selling? Every spike we get gets sold off, or is there every dip that we get gets bought up? And we've seen over the last couple of weeks, right? A lot of the sessions we've seen sort of these big dip down on big volume, and then sort of algo buying like the rest of the day, and we recover like everything from the first 30 minutes of sell-off. I mean, we've seen that countless times this year. So, that's a tape read, right? Like as a tape, people are used to now buying the dip instead of sort of selling and panicking into the dip. And we're going to lower and lower lows. And we've sort of seen this sideways choppy action. And I'm going to talk through a lot of the charts. So without further ado, today's topic's I posted a big sort of analysis on ticker GE this weekend, and I want to cover that because there's so many great learning points, I think, for a lot of the new traders, as well as some really experienced traders, whether you like to sell short, whether you like to trade pivot points, whether you like to trade yearly resistances or yearly breakthroughs on charts, or whether you like to trade options sort of on a shorter time period. So, a lot of folks in the Discord and chats, I see a lot of people are chasing these like 2, 3, 4, 500, trying to make these crazy gains in one day, where actually if you kind of take a step back, take a breather, and sort of analyze where charts are, where things are potentially going, I find it actually recently much easier to trade with a little bit of time. And what I mean by time is really giving yourself time for the trade to work out, whether that's going long and sort of letting the momentum to the upside bring you up, or, maybe trying to catch a pivot point, for example, like on a Netflix, trying to short around 360, 370. That was a really good short idea over the last couple weeks, and that dropped all the way close down to about 310 zones, right? So trying to maybe get a pivot point and a rejection down. So there's a lot of plays that you can really, so there's a lot of opportunity out there, team. And I want to talk through some different types of trends, bullish and bearish today. And I have about 1, 2, 3, 4, 5, 6, about 6 tickers to walk through from a learning standpoint. I think you guys are going to be sort of excited to see some of the action, some of the similar patterns and trends that you can maybe, when you're looking at charts and you're looking to trade, you could say, oh, I remember we went over this, like, this happens a lot. And trading's repetition, guys. So when you're going through trading, the more screen time you have, the more you can see the tape, the more you can see the charts, the more you can see the patterns. It sort of becomes second nature, and you just go, oh, this is when I typically want to buy. Oh, this is maybe when I want to be scaling out, taking profits. Oh, this looks like a good short opportunity here. Let me give myself some time. So there's a lot of different trade ideas you can see when you start to get more visualizations, more screen time, etc. So I'm going to walk through, without further ado, that we're going to start with the typical guys. S&P 500, the SPY, as everyone knows, one of the most liquid indexes out there, ETFs out there from an options and equity standpoint. And I'm going to just use the same chart as I have, probably you guys have seen the past 8 to 12 months. I've just been using the same chart and the same drawings because it comes hand in hand here on how I see the charts and how I see the movement, how I see things going forward. S&P 500 particularly, we've been trading in this zone, and I'm going to walk through everything to the T here, especially if we have some newcomers here, that aren't used to sort of charting and technical analysis, etc. But I foresee actually a big move coming in the S&P 500. And that could be a 8 to 10% move up. That could be a 10 to 15% move down. And I see that move happening potentially within the next 3 to 4, maybe even 5 months. And there's a couple of reasons why I think that move's happening. I think this chart's starting to get coiled up. The VIX is really getting cheap. I think there's going to be a potential move soon. And we have March OPEX coming up. So volatile contract options, people were buying March OPEX, which is the March 21st expiration date, which is coming up in 3 weeks, 2.5 weeks per se. And so when that happens, a lot of folks have been buying this option expiration over the last 8 to 10 months. So we're going to see a lot of movement, I think, over the next potential 3 to 5 weeks. So be on your toes, be ready. There's going to be volatility, in my opinion. We had one of the most famous ever VIX traders come in. He's known as the 50-cent VIX trader. You can Google him, search 50-cent VIX trader. There's a zillion articles on him. You can Google him. Last time he came around and appeared anonymously was in 2018. I believe he turned a $5 million bet into $200 million trading VIX options. He came in again and slapped an ask at 50 cents on the May $50 VIX calls. We're going to talk through VIX later. So, keep an eye. There's a lot of things going on behind the scenes right now. There's some big positions being taken. You can see them. You're seeing the whispers on the street. You're seeing big volatile orders like that. I think people are preparing for a potential big move in either direction here, and you're starting to slowly see positioning to say so. And so I see a lot of folks getting really bullish. I see a lot of folks getting really bearish. And keep in mind, I don't think any analyst on Wall Street has any clue what's going on, because the reality is some people have S&P 500 targets at 450 and others have them at 300. I mean, that's a 30-40% move in either direction. That's obscene. No one's even close to being on the same page. You're seeing a Wall Street versus technical fight. Now you're seeing technical traders play this market to the upside right now, and then you have fundamental traders in Wall Street being like, how are the stock market trading so high right now? How are we going up? So you're getting a lot of just uncertainty. No one knows what's going on. It's really tough to choose direction. That could be either really good or bad for trading, right? We as traders only care about one thing, or me at least. I care about range percent, whether the market goes to the moon or whether the market goes to zero. I could care less. I just want a fast, swift, easy to trade trend market. I'd like a fast move up or down where it's easy to trade. 3 or 4 major red days, easy to trade. You go short, you have puts, you ride the trend down, you cover at a technical level. Same thing going up. But right now we're getting sideways and chop, and it's a really stressful trading environment for a lot of very experienced traders. It seems to me a lot of the rookies or new traders are actually kind of trading this market pretty well. People are buying out of the money calls, or playing a lot of, I like to call, lottos, and I'm seeing a lot of those traders actually do really well. And I'm seeing some really big name traders, fund traders, experienced traders, Wall Street guys have been around for decades. They're really struggling. So it's quite interesting to see the dynamics of what's going on in the trading environment and the trading world as of this year so far. But let's dive into the charts. Enough about sort of my rant on sort of what's going on within the marketplace. But let's look at the S&P 500 SPY. This line here is an extension line. Now this line, I drew an extension. This line and each orange box here, guys, represents exactly where the bear market rally came to an end. And it's pretty incredible, because some people say technical analysis doesn't work, or I only use indicators, or everyone has a different there's a million different ways you can trade, right? I find that I strictly trade 90% on technical analysis. And it's just, for me, it's almost like a book. There's a different chapter to it, and it can't really lie. It's just technical analysis. So how do I explain that, right? This is where the market peaked back in late 2021 or first month of 2022, which would be January, right? And this is where the market peaked. We then sort of dropped. We had a bear market rally, and we peaked here. Now, no surprise here. Look at this extension line right through to the top, almost to the penny. That was at about 450. Then we had a big drawdown all the way to 350. We had a big bear market rally from 350 up to 430. Guess what happened at that same extension line? We broke down to the penny, right? We dropped all the way again. We made a new low at 350. Then we had another bear market rally, which is sort of the one we are in now. But we're sort of post this bear market rally, which is why I want to talk through this chart, because it's quite interesting. And we had a third bear market rally, and it peaked at around 410, 405. Then we went down a little bit. We didn't retest those lows, though, like many bears thought we may have, and blow through here to the 330s. We actually held a higher support level around 380. So keep in mind now, this support seems to be around 375, 380, right? Now, keep in mind, this is where we should have actually rejected. This is a daily chart view of the SPY, so maybe this would be about 2 weeks ago. 2 weeks ago, the charts actually said that we should drop, reject this, and go all the way to 330s and fill this gap down into here to the 330s. We didn't do that, though. We actually held a higher low, and now we're trading in here. See this whole, I would call this a bullish chop zone. That's how I describe it as. We're trading above the 390. For me, the new number is 390. That is a really key spot. So if the market gets below 390, 388, my spidey senses are immediately going to go short, and I will probably be trying to buy longer dated puts. Why? If we break this 390 plane, which is basically where the extension line has been for the last 2.5 to almost 3 years now, we've rejected off that T. If we start to trade below, which would I consider this a bear market under here, I still consider the market in a bear market unless we break and hold above 430, 420s. This is where I think there's a whole opportunity to be short and be selling and potentially riding the market down from a break of 390, 388. And how I'd try and play that would be about 360, 370 move down. That's where maybe you could get your blowout in here. Now, keep in mind, all the technical traders are playing for the upside. I do see the bullish case as well. I'm not a bull or a bear right now. Actually, I'm indifferent because of where the charts are. We're actually a little bit more bullish than where the charts say they should be. Now there's a gap fill back up. We've had some resistance problems in the 410, 414s. And, we pivoted off that mark. No surprise there. Why? Look at this level right here, right where the selling started. Back. This is a daily chart view of the SPY. Maybe I'll look at the weekly just to give everyone a bit better interpretation. But 415 has been a big resistance point, right? Right here at this wick. So keep in mind, this is why we had a couple weeks where we couldn't get through that 415 and we finally faded. But now we're coming back to we're rallying a little bit. We close at around 404. Are we going to get that 410, 415, 420 move? I think the market right here, you have a blow off top wick at 425. 425 is an area I think everyone is hoping to get to. If you're a bull riding us, buying in here, I think that's your target, right? For the upside, it's a lot of bullish analyst targets on the street. I see the 420s, 430 all the time. And then I think bears are also hoping it gets here so they have an opportunity to really start to scale into shorts. So this would be a great area, 425, to be selling into strength, maybe repositioning to the short side, scaling out a lot of longs. So that's how I'm going to be looking at it. Maybe scaling out a long, shorting pops in here for maybe a wider move back down to those lows. I think ultimately the chart is saying that we're going to maybe retest those lows in the coming months. Especially if we continue this sideways chop action. Right now we're trading between a 390 and 410 range. And it's been choppy. The last 2 days, I will give the market credit, we had a nice 2-day move, about 2.5% just on the SPY alone. There's obviously other equities within the S&P 500 that had much bigger moves, right? 5, 10, 15% moves. So the last 2 days have been great for bullish traders and technical traders to the upside, right? Let's see if the market will have strength this week to get up to 415. If it doesn't have strength, the 390 is key. Unless we get back to that 390 line, 388, there's still not a whole lot of bearish sentiment right now. Obviously, the markets are driven by algorithms, right? Algorithmic trading, macro trading. So when technicals become a really key level, if we get under 390, 388 and don't hold that for a day or two, we could see that flush quickly to 370s and 360s. Same thing to the upside as well, as I just spoke through. So we're in a tricky spot in the S&P 500. I think your 425 is a bear market rally target, while I think 360, 370 would be your downside target. So I'm hoping the range starts to open up a little bit, guys. The VIX I talked through is under 20. VIX under 20 in a market like this, to me, has always sort of been like a shocker. Typically, when the VIX is under 20, that means investors are really comfortable where they are in the marketplace. And with rates continuing to hike, fastest rate hike cycle since the 1970s, inflation at 40-year highs, you have sort of Cold War dynamics going on with China, Russia, and other things going on within the markets itself. You have commodities are starting to curl up and sneak back up here off the lows. So I think things can get a little bit interesting over the coming months. CPI is going to be pretty big over the next couple reports. So I think the comfortability, to me, I think we're way too comfortable where we are in the market. The market's not trading at 350 right here. It's trading at 400 plus, which is technically a big premium to the marketplace right now, and way over the average sort of 10, 20 year moving averages. So this is an interesting spot. I'm not bullish or bearish, but those are the levels, as I mentioned, guys, 390 and 415. 415 break, you could play it maybe to 425, 430. If you break under 390, I think you got to look to play some downside. I'm hoping we finally break out of this boring trading range that we've been into for days and weeks, okay? So that's the S&P 500. I hope that's helpful, guys. This is my extension line. Feel free to draw one yourself. The horizontal lines are basically where resistance and supports are. And keep in mind, a lot of things have been happening off technical levels. And that's typically how I trade. So let's jump into today's primary session. We're going to run through about 5 tickers, guys. And the goal of today is to take a bigger time frame mindset. And so that could be long options, that could be long equity, right? Like a bigger time frame. So, looking at a chart and saying, okay, what can this do? Where is this potentially going to go in the next 2 months, 3 months, 4 months, 5 months? Not necessarily where is this ticker going to go in the next day or hour or minute. Typically, we trade really fast. We don't think about the bigger time frames, but it's important sometimes to take a step back, take a breather, and see, because a lot of how big money likes to look at things is not by the second or minute like a lot of us try to trade, or hour or day or week. They look at things by the quarter, by the year, by the month, much larger time frames. And so they're positioning for larger anticipation of moves throughout a longer duration time. So I'm going to walk through some of these. The first ticker I want to talk through is GE. So keep in mind, just want to make sure everyone's still connected. Good. We have everyone on the view here. Awesome. Good. Any questions? I saw a few people asking questions. Keep the questions for about 4:40 p.m. In about 17 minutes, I will run through some Q&A there. So just if you have any chart questions or stuff like that, just leave it, write them down, take a note yourself, and I'll try and get to them as usual. We haven't done a Q&A in quite some time, so I'll talk through it. But I want to walk through GE's daily chart team. This is quite of an interesting one. Let me get rid of some of this hokey pokey here. So I want to talk through GE. Okay, so this is the daily chart. I shared this actually via the Discord and then social media as well. There's 2 visualizations I want to walk through some folks here. The first one is the daily chart on ticker General Electric. So it's quite a crazy chart. It's quite a crazy ticker as well, right? Because what's cool about this name is I'm studying it more and more. The options are extremely cheap, about 25 to 35% IV premium for a name like this that actually is moving quite quickly. For example, right, Apple trades at like a boring, slow level all the time. And the options are very similarly priced, but GE is moving like 1 to 2% a day right now, and that's equivalent to a large options move. So this name, I think, is going to become more and more options liquid over time. It's starting to pick up the options volume over the last couple of weeks. And there's no surprise there. It's been going pretty crazy vertically to the upside. And I'm going to talk through, there's multiple opportunities just looking at what happened in the past tape over the last, I'm going to take a 2-year approach here on the daily. So back to 2020. Okay. So 2020, there was a big run that started around $45, went all the way to $90. So basically a 1x move. You doubled your money from 45 to 90. Then we started to chop around and consolidate for about, 5-6 months. Then we started to see some selling and depreciation, and the name dropped all the way back in 2022, back to the 46, 48 levels. Now, keep in mind, that's where the run started in 2020. So dip buyers 2 years later said, oh, this is a nice opportunity. Maybe this will be support. So, right, there's no what's the word I'm looking for? I guess there's no way to describe it better than technicals here, right? Because this ends up showing as another support, right? So then we get a bounce off 48. Right? This is the daily chart where we get a bounce off the 46, 48, and we ride all the way to 60, 62. Now, what happens at 60, 62, team? Because this is important. This ticker is trading perfectly like algorithms and macro traders would trade it. We have resistance here at 60, right? It starts to sell off when it hits 60. Starts to sell off when it hits 60. So what happens? We get a bear market sort of bounce in this name. Underperformance bounced up to 60. And guess what happens? It sells back off on a daily chart. Now, keep in mind, right, guys, this is not a small cap or med cap stock. We're not getting 2 or 3 red bars and we're filling that gap. This is taking like a month and a half to get back down, right? So when you're trading these big, large cap names, you need to give yourself a larger horizon. It's not, is it going to get there by next week? Or is it going to get there in the next 3 months, right? So that's why when you trade these names, I think going larger for longer in terms of if you're playing it via options. So if you don't want to, play 30, 50, 100K in like a long equity trade or a short equity trade, you can play maybe 5 or 10K on options and maybe still get that same return, right? As long as you give yourself enough duration to make a profitable trade setup. So this is an area, right? This is a bullish opportunity to get back up. Now you're in a short opportunity, a bearish opportunity to maybe try and short here to ride it back down. With shorts, then you ride it back down. Sellers taking profits. Then what happens is the name creates a double bottom window. So you get a circle here, double bottom at 46.48, another double bottom 46.48, right? So now we're showing strong bidding around 46.48. Right? No surprise though, right? We go back to 2020, no surprise. That's where the run started, all the way up to almost 100, right? Then we get a pop. Now this is where I want to talk to traders, all the new traders or even experienced traders, because a lot of people trade this divergence a little differently, okay? So we have a bottom pull, we have another bottom creating a double bottom, which is a bullish sign for an equity or an index or ETF. Then we pop. Now, the key break is that 60 spot, right, where it faded once, twice, and 3 times in the past. Now, we get through the 60 range and watch what happens here on the daily chart. Just from an example term here, right? We get through the 60. We have a 3% move, right, a 1% move, and then another 3% move. And that's a 3-day move. So that is what you want to see as a trader. It breaks a resistance and then has a strong upwards move higher. That's a 3, 6, 7% move for a ticker that doesn't move anywhere near that in 3 days, has a 7% 3-day move, right? So if you're playing that via stock, that's a 7% move. You're playing that via equity options, that's a much, much larger percent move, right? And then we start to hold above the 60. So that's a bullish sign, right? Now we get a little bit of chop in here. We didn't actually fill that 72 gap just yet, so it's a little tricky. If you bought the 62 break, you're thinking to yourself, oh my, this is going to run the 70, 72. I can make a quick 10, 15% on this. I'm going to swing it, right? But actually, we broke down. But the breakdown was actually very healthy for the stock, right? At this time, back in December 20th, 2022, which is actually just 3 months ago, we then created a higher low. And I want to show you this as a horizontal line, guys. Look at this higher low. The 60 resistance from 2020 to 2022 is now the support. You see this? So now we're creating, used to be resistance and people selling here. Now people are coming back in to buy it here, which is now the resistance is now becoming a support line. So now we get a double bottom, double bottom, double bottom, double bottom. We get to move up. We get to move up. We break through. We now hold. And then guess what? Now we get the overextension vertical face ripper, I like to call it, right in here. From a 60 pullback, healthy pullback, to a fiery move all the way up to 80. That is a 40% equity move in just 2 months. For a large cap name trading over $115 billion in market cap, you get a 40% move in 2 months. That is an insane move, guys. For those that don't really trade large caps like this, that is a huge move in 2 months. Similar to your Nvidia, similar to Tesla. G's one of the best performers of the year, and you can't fight price action. Look at these. Look at these bars. 3%, 1%, 5%. So these are big moves, right? And right when we broke this 70 plane, even more buyers came back in. Look at this. We had a 1 day, up 1, 3, right? 6, 7. So this is another 7% equity move, 8, maybe even 9%, right? So that, and this was another key resistance. So 60 and 70. Then we broke 70, 72, and we exploded. But now, is the ticker still going to rally? Or is this name now going to get into a, what I call a chop sideways area? And I'm thinking the latter. Why? Because we're now running into a 6-month zone of where the stock did nothing but sideways / flat. So it's made a huge move in the last 6 months, almost 100% up. But now we're getting to a point where the risk versus reward on the short side actually looks more attractive. Now that is visual 1. I want to show you visual 2 because this is now going to be a larger time frame, right? Let's look all the way back to 2018, back in May. This hit a high of a 91-ish, 92-ish dollars. The name then presented itself and kept selling down to that 40, to that 40, to that 40, right? Back at the 40s again. There's no question we haven't rallied off that 40s. And the 40s seems to be some really strong demand. But here we are again. The name is now creeping back up to 90. Back in 2022, we peaked at 90. Back in 2021, we peaked at 90. Back in 2020, we peaked at 82. Back in 2018, we peaked at 92. So I'm looking potentially for this name to maybe get over pushed to the 90, 92 zones. And that's where I might be looking to position into a short position, maybe buying puts 4, 5, 6 months out, close to in the money. That is now a trade idea that I am now analyzing for myself. If we fill this gap up, that would be a 4 to 5 year resistance gap fill. It took 4 or 5 years for the name to get back from the 40s to technically the 90 levels, right? So that is a strong resistance. Now keep in mind, that is a bearish take for me because of how bullish the price action's been. If you're a bull and playing the upside, you may actually look at this saying, you know what, this 5th year, we may actually break out of this channel, this 5-year downtrend, and maybe we break out of the downtrend from 90 and we go all the way to 108, another 20% move up. And then maybe if we break 108, there's another gap fill right here. And it gets real gappy. For a name like this name could get gappy to the upside. So I get now the bullish narrative of saying this name's so strong, we can go on another 40, 50% run here, right? So it's going to be, we're at a really crucial point on this name, and I'm going to be hawking this name the next 2 to 3 weeks to see if there might be a move going rejection back to the 70s or 60s, or if we actually crush and we move to the hundreds. So this is going, I think this name in particular is going to provide some awesome trading opportunities, short or long here, and it's sort of creating a nice opportunity for itself. Hopefully this chart's really helpful. You're able to see the bullish trends, the double bottom push. You're able to see resistances, right? So hopefully, this learning lesson so far is helpful on ticker GE. Next one I want to walk through from a bearish price action standpoint, which I'm now getting bullish on, is a ticker called Intel. You guys probably know this. This is one of the world's largest chip providers. I mean, it's a company that's been around for, let me look, I was going to say 30 years, maybe longer. 1997, almost 30 years, 25 years. So, so this is a name that's been around for a while, but guess what? It's been dead money since, let's look at the weekly chart, excuse me, back since about 2000, all the way back to 2014. This was trading at 25 a share in 2014. This has been a dead money stock for 9 years. And now all I see everyone talking about is it's dead, it's going to zero. I actually think this is an opportunity to potentially play the stock on the long side. I would not be pressing a short here. It's filling 9-10 year gaps down, and the price action is starting to show my thesis. This is a name that I think could be a nice long opportunity if you have a horizon of a 2, 3, 4, 5, 6, 7 year horizon. 25 has been a really solid support on the name in just the last 6 months alone. You can see that we have a 1 bottom, a 2 bottom, and a 3 bottom here. So there is now demand and buy zone at $25 a share. This is not a name I would be looking to, throw in crazy size on for the long term, but it's a name that maybe you start to scale in 1/5 of a position on every 5, 6, 7% dip down, maybe another 2/5 of a position, and maybe that's how I look to play it. I'd probably look to play this one for me at least via the equity side of things. I don't see so much of a risk versus reward from an option standpoint. It's a slow mover proportionally, so I just play it through just shares alone. It's a little less stressful, and you don't have to wait a long time period for a move to occur. But this is a name that I think potentially could bounce here at 25. And if it doesn't and it goes lower, no problem. I have alerts set up. Look at this. 22 is the next line. And then all the way back to 2010 support, we have a move to 12, even 12. I mean, that would be pretty drastic. 18 seems like a nice strong support back to 2012. So, if this continues lower below 22, I think those would be your levels, 18 and 12. But I think that would be a really drastic move down. And keep in mind, everyone's bearish on this name right now, which could create a bullish opportunity. We've seen similar, right, with Tesla. Everyone was bearish. Everyone was saying sell at 120, and now we're sitting at 200 plus. Nvidia, no one wanted it at 130s, and now it's 230s, and now everyone wants to buy it at 230s. It makes no sense to me. Sometimes trading doesn't make sense. It makes no sense, but so this could be an opportunity where no one wants it at 25 and maybe everyone will want it at 30. So for the upside, I think if you trade in this channel of 25 to 30 range, that's about a 20% channel. And then above 30, it could get gappy. And this is where I think above 30 would be a nice spot to start to sell into. I think from 30 to 36 Could be some serious moves in there, and that's would be sort of my end targets on this one, 35, 36 from a multi-year perspective. As I said, this is a slow mover typically. It's not a fast high riser. You're not getting your 7-8% moves daily like a Tesla and Nvidia. It's not super volatile like that, although it's been in a full-on bear market downtrend. So that's Intel. That is a bearish standpoint, right? The last note I wanted to make, guys, on Intel for the bearish traders, this is a cool one, actually. So it traded from 2018 above, it always traded above 37. That's where the run started to the 60s. Now, guess what happened in late 2022? We actually broke below that 37 plane. Now, what happened? Because this is really key here, guys. The run started in 2018 at around 30. And we broke the 37 support. So what happened was new shorts and bearish traders and technical traders came in, and we actually just full-on faded all the way back down through the 30 support, all the way to 25. So this break at 37 was a key technical level to go short and sell. And we basically then dropped from 37 all the way to 25. And if you do the quick math and calculation just alone on that, over maybe a 10-week radius, 10-week period, the name basically dropped almost 50% from those levels. I mean, that's a big move in a huge $100 billion plus market cap stock, right? And that's from a technical level. When this technical level broke, the name faded, fully faded. So that hopefully that's helpful to think about, right? Because this is how I look at trades, right? And today's lesson is about the longer time frame. So we're looking at weekly charts, right? We're not looking at daily charts or hourly charts or 5 or 10, 15-minute charts, which we like to trade, day trade and intra trade on. This is a bigger picture type of trade, right? So how would you play that if the 37 broke, right? If you're seeing other charts like this, how would you play it? How I would personally trade it? Maybe just short some small equity, but maybe I bought puts 2, 3, 4 months out, sort of maybe at the 37 strike or 35 strike. And then all of a sudden, those are now deep in the money and it's a 3, 4, 5X bagger, right? So that's how I'd probably look to trade something like that. That's Intel. I have 3 more tickers I want to cover. NVIDIA. Let's talk through NVIDIA. This is one that's sort of hot. It's in that AI FOMO. I don't even know what the hell you want to call AI. AI's been around forever. I'm not sure why it's a thing now. That I still can't grasp. I don't understand why everyone's getting all excited about artificial intelligence now. You know, Google and everyone, and has been using it for a decade. But anyway, back to reality here is every fundamental person I talk to, I speak with about NVIDIA, or anyone I try to get their opinion on NVIDIA, it should be not trading at this level. They are shocked it's trading at this level. But then every technical person I look to, or I'm seeing, or any trader that's trading NVIDIA, they're all super bullish. Now, why? I get why they're bullish. From a weekly standpoint, we're trying to fill this sort of gap up to 250, sort of a blowout top at 255, 260, and even up to the 270s. So we're in that range, right? Unless NVIDIA goes under 230 and starts to really trade below 230, which it could, that sort of would remind me of a Netflix type of move. It blow out top here and then sort of fades slowly over a couple weeks period, which NVIDIA could do. We could fade back to that 200, 215 level, 211 level. But NVIDIA's in this gap range right now, and it's hard to fight it. You've seen people trying to fight this strength in the name. Every dip it goes green the next day. So it's hard to fight that from a short or selling perspective. And we've seen the longs really take it to the shorts here. This name has gone vertical. Just a few months ago, this name was trading. This name was trading at 140 in January. I mean, that's obscene. It's a $100 move. It's since January, just straight vertical. 50% in just a month. With no retrace, just vertical. Let's look at the daily chart because that's probably even more vertical, right? We had a capitulation here in the 114s, 120s. We built up. We now have resistance in this sort of 160 range. We broke the 160 plane, and it's just went vertical since. But as I said, we're now getting to a crucial point. 225 was a really key resistance level, and we broke through it, and we've held 1, 2, 3, 4, 5, 6. We've traded above 225 resistance for 7 days now. So now we're in this gappy mode where the next level for the upside NVIDIA would be about 250. Now at 250 for me, similar to the GE trade, I would be more inclined to try some puts / be bearish multi-month here because there's an opportunity to sell this here because it filled all the gaps. It's made now 150% move off the lows, similar to a Netflix type of move, which we've seen. And I'll compare those two charts in a minute. But 250, 270 is where I'd be more inclined to be short on a name like this and be selling and scaling out longs for big profits in this next level zone if we get that gap fill. If we don't get the gap fill, I see a potential downwards move to the 210 zones. That seems to be the next sort of buy zone demand. So if you're playing a shorter time, shorter wick period, 210 I think could be a nice little area with 250 being your upside. Let's compare this to Netflix chart because actually it's funny, right? Netflix capitulated in the 160s and it made a move all the way back up to 370s. Now keep in mind, it was funny because everyone was thinking Netflix was going to go to 400, 500, and I'm like, how? It was just at 200. I would be really surprised because there's so much resistance here in the 370s, 380s. The stock actually started selling a ton at 350. And so we sort of filled that gap up, and then it started to get really toppy. No one was coming. Volume was drying up. You know, it used to trade 6, 7, 8, 9, 10 million shares, 11 million, 15 million shares, 28 million a day. And then it started to get down at 6 million, 4 million, 3 million, 2 million, 5 million. So it started to lose sort of interest in here. And that's when we started fading and the algorithm started selling. And keep in mind, that's no shock or surprise because early last year we started to fade this. This name started, I didn't personally fade this here. This name started to fade this in the 350s, 360s, 370s. So, when I made the alert to potentially go short in the 360, 370s a couple weeks ago, that trade has really worked out and it still looks weak and it still looks like it may go and fill that 280 gap. So this trade has been great off 360, 370s. That's about a 10, 15% equity move down. You're playing that options, it's probably much, much more. But same sort of thinking behind this trade versus a NVIDIA or a GE, right? It just continues vertically and finally just starts to fade and consolidate for a little bit. Like I'm not saying NVIDIA is going to crash or drop 10, 15% tomorrow. I'm saying that it may need to consolidate for a little bit longer and then make its 10, 15% move up or down. And right now, NVIDIA looks like it wants to go up. So let's see what the chart and price action does this week, right? So that's Netflix for you. Same with, the GE chart we ran through. Hopefully this Netflix one's helpful because it just shows you we just get this top out and then just fade about a couple weeks later. So that's a really good learning example from this ended up being a oversupply zone in here. And that's how we faded. And we get an oversupply zone here, and that's how we faded. So technicals for me, guys, are everything. I mean, as I'm speaking this, it's crazy how things are going to the penny. Do you see a lot of these technical moves to the penny? And this is how a lot of algorithmic traders is how, algorithmic self-trade, macro traders, technical traders, right? So they're all looking at the same charts. And as traders, we want easy, clean trends. So if you're long this stock in here and it fills the gap up here, what are you going to do if you're a trader? You're probably going to sell in here. You want to put those profits at the highest rate you could book them, right? And that's where people will book them. So, excuse me. That was Netflix for you. A couple quick more high beta stuff, more volatile stuff. I have two names for you. Boyle, from a learning perspective. Let's look at the daily chart. It capitulated at 430s in here. And then we sort of broke up, and basically the resistance here was 650 for about a week. We broke through 650. What happened when you broke 650? New buyers came in, the stock popped another 17%, 18% from there. And now we're here. So where do we go if you're trading Boyle here? This is a very, very, very volatile commodity, natural gas. This thing goes up and down. It dropped 90-something, 96% off the highs. I mean, it just fully took everyone's mind. And this is just crazy. It went from 120 down to $4 in less than 10 months. Oh my God. Just absolutely decimated. Natural gas got decimated as a commodity. So did oil, but nowhere near the amount natural gas went down. I think this had a 5 or 6 handle and it's down into the 2s and 3s. I mean, it's just crazy. Just crazy move. And so, now we're bottoming here. We capitulated in the 4s and 5s and 6s. And, does this move have a move potentially to 10? Yeah, I think so. It looks pretty good. So I'm going to be watching this as a potential maybe 8 breaker up into the 10s. And then the 10s, I think, it might run into a little bit of short-term resistance. So if you're bullish trading this from the 4s, 5s, 6s, I'd say it has a nice opportunity maybe to get all the way to 9 or 10s. And then I'd probably be looking to scale up, maybe booking 100% profits in there. From a short perspective, maybe 10s would be your spot. But we are in a gap fill going higher right now. For this bullish little run bounce here, whatever you're going to call it, we'd have to hold this above 650. I'll put in a drawing here, horizontal line. Anything above that previous resistance, if we're trading above that, still in a little bear market rally. If we're trading below 650, it could retest those lows and get ugly. So my stops, if I was trading equity, I'm not trading this name. I have no position in this natural gas name. But if I was 650, it would sort of be my give or take stop on these names. Hopefully that's helpful. That's Boyle. Last one, AI, another ticker, AI. Want to talk through this name. I drew some lines for us earlier today when I was preparing for this session. Back throughout the past year, we have resistance at $24, $25 a share. We're now trading above that trend line as of Friday close. So if this name continues to trade above this horizontal line here, guys, there's an opportunity for the name to maybe go up and retest those 30 and then 34, 35 levels. So it has this upside surprise potentially and to fill those gaps. When we start to get into the 34, 35 zone on ticker AI, that's when it becomes a little bit more heavy and choppy. Now keep in mind this capitulated in the 10s, 11s, and it's had a beautiful run over 100, 150% in just a short time, in just a month. So you do have to be a little cautious here buying, obviously, because it has had such a drastic run up. It is a high beta name. It does move very volatilely. So keep an eye on this. But if you're trading it, obviously keep your stops off the risk level and risk versus reward level for your comfort zones personally. But I like this name above 25. If it holds above 25 for the entire week, that might be an opportunity, maybe scale in for a possible move to the 30s. So that's AI. Hopefully you guys appreciate that analysis. Yeah. So that's that. Whew. Kind of ran through that a lot. I tried to get through that quickly. It's about 40 minutes of time. As promised, we are at 4:45. I was a couple minutes over for Q&A. For next week, we do have Powell Tuesday, Wednesday. If you just joined us, we have Fed jobs reports. It's going to be a big week. We've been trading in this SPY range, as I showed you guys. We've been in this sort of boring, tight, sideways range for months. I'm thinking we have a coiled move coming very soon within the next 3 to 4 months, possibly even the next couple weeks for a larger 5 to 10% move in the equity. So I'm really starting to prepare for some volatility here. VIX is getting really cheap. It's an awesome opportunity to start hedging longs for longer duration sort of assets or puts because of how cheap the premiums are and how cheap the VIX is. It's always the best time to hedge when things are really cheap. And right now, the equities are really expensive, but hedging is very cheap right now. So keep an eye on some of the put flows or calls in the VIX. As I mentioned, there was a VIX trader known by 50 Cent. You can search him, 50 Cent VIX trader. Pretty famous. He's an anonymous. He or she's an anonymous trader. But everyone knows that person from the street and from sort of the CBO, everyone in Volatility Exchange. Everyone sort of knows who that person is. They made a big bet a couple weeks back on the May $50 calls on the VIX. So clearly this trader is betting on some volatile times coming up in the equity market. So very interesting to see. So keep an eye on that. You could obviously go Google. There's a ton of articles on this person and their trading, I guess, habits or trades throughout the last couple years and decades. So check that out. I'll do some Q&A. Let me jump to that now. Hopefully this session was helpful, guys. I did like 2-3 hours prep time for everyone today. Seems like we had a pretty good turnout, about 70 to 100 people throughout the session, which is always good, always a good target. But I'll hop into some questions if you guys have any. I'm hoping this is helpful. If you don't have any questions, definitely just drop some feedback below. I spent a lot of time doing this, so any sort of feedback or positive or negative, I'm happy to take it and just sort of work off it and see how I can make these sessions more improving for everyone. So awesome. Shoot some questions below. I'll try and ask some for another 5, 6, 7 minutes before we jump off at 5 p.m. Eastern. Okay, let me take a quick sip of water and I'll jump in some of these questions. Jeff, Rajan. Okay, I'll start with Rajan Patel. Thoughts on VIX, call or put for long? When the VIX is under 20, I typically like to be a little bit more bullish on the calls for the VIX, but keep in mind, VIX is just an indicator to hedge for volatility. So, those premiums pretty much are dead money, kill money, unless the markets get volatile. So if you do play the VIX, maybe you play it closer to a little in the money, but multi-month out in case you do get a move. I was looking at the May $30 calls or the June $30 calls on the VIX. I was looking at those actually on Friday. I was going to potentially add, but I may look to maybe scoop some of those up in the next couple of days or weeks. Maybe the May 30 strike, I was looking at the VIX. So just as a volatility hedge, it'd be something, a very, very tiny little position, just in case the markets do get volatile, could take advantage of some of those cheap premiums. Hopefully that's helpful. Rusty Darlipple, thanks, Spud. No problem, guys. Kelly B, thanks for talking about Boyle. No worries. Yeah, Boyle's been just an absolute decimation for people trying to time that falling knife. It's just been a terrible long trade for many. A lot of folks, I think a lot of folks on the street got probably pretty crushed on that one. As you could see, it capitulated and just almost went to, what, 4s or 3s there and just popped up. So, yep, keep an eye on Boyle. That was an interesting one. Interesting TA on that. Tarson, Barkin, great analysis as always, Spud. Let's get the bread this week. Of course, man. Hope you trade well. Keep studying. JC, please to clarify, Intel, is it going down tomorrow and for the week? I have no clue. I have no clue what Powell will say. I have no clue if the markets are going to go up or down. As a trader myself, I'm just following the price action, where the billions being bought, where the billions being sold, and just trying to scalp a little off the top there with a cherry. So I don't care if the market goes up or I don't care if the market goes down. Just looking to trade off that action. I talked through the Intel chart. There's been a 3x bottom on the past couple months at that 25 range. So there clearly is a lot of interest around that 25 level. So maybe keep an eye on that 25 level if you're looking to trade Intel, JC. Hopefully that's helpful. Clinker and Clint, thanks, man. Just caught the tail end. I'll watch the rest tomorrow. Yeah, no worries. It was a good session. Hopefully enjoyed it. Snipe Trader, what's your thoughts on small caps in 2023? I haven't even really looked at small caps. I've maybe traded 2 or 3 of them barely for the entire year so far. The thing is, a lot of large / med caps are now sort of becoming small caps sort of thing. So there's a lot of opportunity, I think, with them. And if we sort of get this pause or sort of get this cycle in the Fed that maybe they just don't go too crazy on the rates, I think small caps can do really well. Small and med caps can do really well. The problem I think I have with small caps where they are now is what you're starting to see a lot in the really small penny stock area is just companies really suckered for cash and tons of offerings, just tons of offerings. People are bleeding cash and they're just trying to, try to get some rise in the share price just to throw in an offering. And you're seeing a ton of offerings overnight, offerings midday. So it's not an area you really want to be in, sort of, in my opinion. That's why I just don't play it. I haven't really traded small caps in quite some time, few years, when they were really hot and cash was free and the markets were, ripping and, no one cared about money. It was just, but now things are tight. The Fed wants, less money supply. They want to, lower, potential dollars in your pocket. So it's tough for companies that are burning cash at strong rates. They have to continue to raise capital, and that just hits share prices. So not necessarily super bullish on small caps, but as I always say, if the price action's really strong on them, there's always opportunity to make some good coin trading them intraday. So keep an eye on that. Rajan Patel, what's your thought on Rivian? I'm not going to go into particular specific names. I don't want to slow down this session for folks. But yeah, I'm not going to go into specific names here. Maybe I can do some TA in Discord server. Raphael Grave, thanks for your time teaching us. No problem. Great for you to join. Happy you joined. Kelly B, what commodities are you eyeing for upcoming cycle? Oil, semis, any at all? Pretty sort of bullish / sideways on oil. Semis, I am bearish where the names are trading. I think the names are trading at ridiculous levels for semis right now. Specifically the NVIDIAs, the ONs, the AMATs. I think the P's are just astronomical. I mean, NVIDIA's, I think, trading at like a 75 P or something. I just think that's ridiculous for where we are. But as I said, right, it doesn't matter fundamentals. It's just names are trading on technical pushes right now. So it's hard to fight it. Turbo, what's going on, man? Thanks for the info. Always, yeah, feel free to check out the stream. You guys could always replay it. Tarson Bacon, what do you think the key difference are with the pro traders doing bad in this market and rookie traders making better trades this year? I think the difference between why a lot of really, really strong traders over the past years or decades, traders that work for funds or maybe aren't performing well is because of how choppy things have maybe been, along with also being off sides a bit as well. Potentially that could be a play. If you're a hedge fund trader and you had a great year last year, potentially short and expecting more short opportunities this year, and shorts have sort of gotten taken out per se, in sort of the larger cap space, right? If you were short Tesla at 150, you're underwater. You're short Tesla at 130, you're underwater. You were short Tesla at 180, you're still underwater. So, some of these names have just went vertical so quickly, where the moves were so violently to the upside that it's so hard to just quickly react. And if you're a trader trading on big time frames, as we spoke about this session today, people trading multi-month views, it's hard to quickly change positioning around. But you're forced to cover, you're forced to sell, forced to this. We saw Tesla forced to sell on the downside to 120s, and we saw Tesla forced to buy on the upsides to 200. So it's a pretty crazy market right now. I'm not going to lie. And I just don't think anyone was ready for it. And so I think there's a lot of big money out there that just either got pushed around and people just having choppy years so far. And I think when we get a specific trend up or down soon, when we sort of break out of this index range, I think that's when you'll start to see some easier trades down or easier trades up. And I'm hoping for the same thing as well. Just an easier trend to trade. Right now, I just feel it's pretty choppy. Hopefully that's helpful, Tarson. Rage and Patel, thanks for your time, providing good knowledge always. S, appreciate all the knowledge you share, always. DB Guru, what will happen to the crypto if we go into a recession? I have no idea. Crypto is the wild, wild west. So close your eyes, put on a blindfold. I really have no clue. No one has any clue what's going to happen in any market. We just, as I always say, just got to trade the price action, read the tape. Price action dictates market movement. So as I said, I'm just looking for a large move up or down, and it's just easier to trade that way for me with my trading style, and just aligning the technicals to place an educated trade and risk properly for me. Drew's basement sector rotation showing strength in materials and industrials. Got any faves in those areas? I mean, yeah, Drew, the favorite names seem to be the Deers, the Caterpillars, the CAT. What other industrials? There's an industrial ETF. I'm thinking about it off the top of my head. But those are the couple names. I think there's also government funding, something going on with some bill, infrastructure bill, I believe it is, that's funding a lot of some of these projects. So these names have been bid up pretty hard. They're really outperforming actually, Caterpillar and Deere, and they seem to be, every dip seems to be getting bought up. So those would be the names I'd probably watch. Those are the sort of I'd call them the industrial FOMO names where everyone's sort of trying to be in. So that's how I'd probably look to make trades off those levels. Hopefully that's helpful. Yeah, awesome. If there's no other questions, it seemed to slow down. Hopefully this was helpful. Give it a like, share it with friends. If you are new to the channel, please subscribe. You can also check us out. We have a premium Discord, a bunch of really great traders, awesome community, no nonsense, just really people there to learn, study, and make trades. And that's why it's such an awesome community. A ton of contributors. It's active like pretty much 24/7 during the day when the markets are going. Feel free to check us out. You can see the link below in the YouTube. If not, feel free to share with family and friends. Hit the like button. Hopefully this video was helpful and sort of is a good help for your trade ideas for this week and how you're positioning and thinking about the market. So I'm always here to help. I do a ton of analysis and hours of studying for this. So any beneficial or any even negative feedback you guys have for the lessons, just share them below so I can see and read and make adjustments to the next ones. Awesome. Thanks, guys. Have a wonderful weekend and enjoy the trading week coming up. And let's trade well, and good luck to everyone. Take care.